The global technology industry is one of the fastest growing sectors, driven by smartphones, digital services, AI, 5G, and cloud computing, with over 1.2 billion smartphones shipped in 2024. Apple Inc. and Samsung Electronics are two leading players shaping modern digital lifestyles. Apple, founded in 1976 in the United States, is known for its iPhone, MacBook, and Apple Watch, with a strong focus on ecosystem integration, privacy, and innovation through Apple Silicon, and it reports under US GAAP. Samsung, founded in 1969 in South Korea, leads in smartphones, semiconductors, and display technology, especially foldable devices, and reports under IFRS. This project compares their products and accounting standards to understand how IFRS and GAAP affect financial reporting, transparency, and cross-country comparability. This slide summarizes the accounting diversity between Samsung under IFRS and Apple under US GAAP across 6 areas. For review recognition, Samsung applies principle-based IFRS 15, allowing more judgment, while Apple follows the more rule-based ASC 606. In inventory, Samsung can reverse write-downs under IFRS, but Apple cannot under GAAP. For property, plant, and equipment, IFRS allows asset revaluation, whereas GAAP requires historical costs. Lease accounting differs as IFRS uses a single lease model, while GAAP separates operating and finance leases. In R&D, Samsung may capitalize development costs if conditions are met, but Apple expenses all R&D. Lastly, IFRS applies to expected credit loss model for financial instruments, while GAAP uses more detailed rules. These differences can lead to different financial outcomes even within the same country.
Foreign currency transactions happen when a company buys, sells, or borrows in a currency that different from its main currency. For example, Apple's main currency is US dollar, while Samsung uses the Korean won. Both companies face exchange rate risk because they sell globally. Gains or losses from currency exchange are recorded in profit, and to reduce risk, they use hedging tools like forward contracts and options. Foreign currency translations happens when a company converts the financial statements of its foreign subsidiaries into the parent company's currency. Both Apple and Samsung use the current rate method, where assets and liabilities are converted at their closing rate, and then revenue and expenses at the average rate. Also, any differences go into equity, not net income, which helps reduce short-term profit volatility. In short, both Apple and Samsung are heavily exposed to foreign currency risk, and careful accounting and hedging are essential to protect their earnings and provide clear information to investors.
5.0 Comparative discussion. In terms of revenue recognition, Apple applies ASC 606 under US GAAP, while Samsung follow IFRS 15. For inventory, Apple use FIFO with no reversal of write-downs, whereas Samsung applies the weighted average method and allow reversal. Apple measure property, plant, and equipment at historical cost, but Samsung can use the revaluation model. R&D costs are fully expensed by Apple, while Samsung may capitalize development costs. Lastly, Apple reports in US dollar, while Samsung reports in Korean won. Several emerging issues are reshaping international accounting for technology firms such as Apple and Samsung. These include the growing importance of ESG reporting amid limited comparability due to non-mandatory standards, challenge in valuing internally generated intangible assets arising from digitalization from AI, incomplete convergence between GAAP and IFRS affecting cross-border comparability, and heightened foreign exchange volatility increasing earning uncertainty.
In terms of science, Apple computer benefit greatly from its highly integrated ecosystem. Its hardware, software, and service work seems together, creating strong customer loyalty and stable recurring revenue. Apple also demonstrates strong financial performance, high pricing power, and continued investment in research and development, particularly in Apple Silicon, as Apple elevates its strong brand image and focus on user privacy further enhance its global competitiveness. On the other hand, Samsung's key strength lies in its diverse business model and strong vertical integration by producing critical components such as semiconductor and display panels in-house. Samsung leads in hardware innovation, especially affordable devices. Its wide product range enables to compete efficiently across both premium and mid-range market globally. However, Apple may witness its heavy reliance on iPhone sales and closed ecosystem, which is limit sensitive prices in market. Samsung, meanwhile, focus on innovative vehicles, semiconductor demand, and less focus on premium brand image. In terms of limitation and challenge, both companies operate complex global supply chains and face high risks and capital expenditure, along with foreign exchange risk and increasing ESG and regulatory requirements. In conclusion, this challenge and require Apple and Samsung to balance innovation, cost control, and sustainability to maintain a long-term competitiveness in the global market.
In conclusion, this report compared the accounting practices of Apple and Samsung from an accounting perspective. Both companies are global multinational corporations, so transparent and consistent financial reporting is very important. Apple mainly follows generally accepted accounting principles, GAAP, while Samsung follows International Financial Reporting Standard, IFRS. Even though the standards are different, both aim to provide accurate and reliable financial information. Key accounting areas such as revenue recognition, asset valuation, and disclosure practices are applied carefully by both companies to ensure fair presentation of their financial performance. Ethical accounting is also essential because misleading financial information could damage investor trust and company reputation. Overall, both Apple and Samsung demonstrate strong governance, accountability, and compliance with accounting standards, which helps them remain competitive and sustainable in the global market.